The Trump administration has thrown another curveball at the global trade system. On April 3, 2025, it imposed a 10% tariff on imports from all Gulf Cooperation Council countries. These countries include Saudi Arabia, the UAE, Qatar, Kuwait, Bahrain, and Oman. This decision sent shockwaves through the region and beyond. The move, while seemingly focused on trade deficits, has far-reaching implications. It has the potential to disrupt the delicate balance of geopolitics and economics in a region crucial to global stability. While the direct impact on GCC economies might appear minimal at first glance, certain sectors are bracing for a potential hit. The UAE and Bahrain, for instance, are significant exporters of metals to the United States. These exports, particularly in steel and aluminum, could face headwinds due to the tariffs, potentially impacting their domestic industries. However, the real concern lies in the indirect effects of these tariffs, which are far more pervasive and could have a more profound impact on the region's economic outlook. One of the most immediate and significant indirect impacts is the decline in oil prices. Brent crude oil prices have already dipped to $75 per barrel, a direct consequence of the trade war fears and the potential for a global recession. This price drop presents a challenge for all GCC economies, especially Saudi Arabia, whose budget relies heavily on oil revenues. The kingdom's break-even oil price, the level at which it needs oil to trade to balance its budget, hovers around $96 per barrel. The current price slump puts pressure on their fiscal planning and could lead to budget deficits. The tremors of Trump's tariff announcement were immediately felt in the GCC's financial markets. Equity markets across the region experienced sharp declines. Saudi Arabia's Tadawul All-Share Index, a key indicator of the kingdom's stock market performance, fell by 0.61%. The UAE markets witnessed even more significant drops, with Abu Dhabi's index plummeting by 2.86% and Dubai's DFM index sliding by 2.64%. These market reactions underscore the nervousness and uncertainty that these tariffs have injected into the region's economic outlook. Beyond the immediate financial market shocks, the tariffs threaten to undermine investor confidence in the region. The GCC has long positioned itself as a stable and attractive destination for foreign direct investment. However, the current climate of trade uncertainty could make investors think twice before committing capital to the region. This hesitancy could stifle economic growth and limit the GCC's ability to diversify its economy away from its reliance on oil. The ripple effects of the tariffs extend beyond oil and investor confidence, seeping into various sectors of GCC economies. Sectors heavily reliant on imports from the United States, such as electronics, automobiles, and construction, are particularly vulnerable. These sectors depend on American-made components and finished goods, and the tariffs will likely translate into higher prices for businesses and consumers alike. This price increase could dampen consumer demand, slow down construction projects, and potentially lead to job losses. Faced with these economic headwinds, the GCC countries are not standing idly by. They are actively pursuing strategies to mitigate the impact of the tariffs and chart a course toward economic resilience. One of the key strategies is diversification, both in terms of trading partners and economic activities. GCC nations are increasingly looking beyond traditional Western markets and exploring opportunities in emerging economies, particularly within the BRICS nations: Brazil, Russia, India, China, and South Africa. Strengthening intra-MENA trade is another avenue that GCC countries are actively pursuing. By boosting trade ties with their regional neighbors, they aim to reduce their reliance on transatlantic trade and create a more integrated and resilient regional economy. This focus on regional cooperation is crucial, especially in the face of rising global protectionism. In a strategic move aimed at potentially easing trade tensions, Saudi Arabia and the UAE have announced their intention to invest at least $1 trillion in the U.S. economy. These investments, strategically placed in key sectors, could serve as leverage in future trade negotiations with the Trump administration. By showcasing their commitment to the U.S. economy, they hope to foster a more favorable trade environment. While the GCC countries are taking steps to mitigate the immediate and short-term impacts of the tariffs, the long-term risks remain a cause for concern. A prolonged slump in oil prices, a direct consequence of the trade war fears, could have a devastating impact on the region's economies. Lower oil revenues would necessitate cuts in government spending, potentially impacting critical infrastructure projects, social welfare programs, and public sector salaries. This austerity could lead to social unrest and political instability, particularly in countries already grappling with economic challenges. Furthermore, there's the risk of retaliatory tariffs from other major economies like China and the European Union. If these economies decide to impose counter-tariffs on U.S. goods in response to Trump's protectionist policies, it could trigger a full-blown global trade war. Such a scenario would be catastrophic for the global economy, including the GCC countries, as it would disrupt global supply chains, increase prices for consumers, and stifle economic growth worldwide. In the midst of this uncertainty, all eyes are now on upcoming diplomatic engagements, particularly President Trump's planned visit to the Gulf region. This visit presents a crucial opportunity for dialogue and negotiation. GCC leaders will likely use this platform to express their concerns, reiterate their commitment to free and fair trade, and impress upon the Trump administration the potential negative consequences of its protectionist policies. The outcome of these negotiations will be crucial in shaping the future of U.S.-GCC trade relations and determining the long-term economic outlook for the Gulf region. The world watches and waits, hoping for a resolution that benefits all parties involved and safeguards the stability of the global economy.